Hey, John, we'll get started here in a sec, so be sure that you get this recorded for anyone who's not able to participate in the live session today. They can go back and watch it later on YouTube. We do post all of these, so feel free to share them afterward for any of your friends that might be interested but aren't able to attend live. All right, so let's kick this off. Thank you, everyone. Thank you for joining today. And as always, these weekly AMAs are designed to allow the community to talk with the core team here at Sperax. And it allows us to give you updates to let you know what's going on, how we're thinking about certain challenges, and ultimately ensuring that we're building products that align with the needs of the users. And we include the users and the SPA holders in the design process, so we can build a product community-driven. The agenda for these events, we start with a basic introduction to the project. We'll do a couple of updates. I'll provide some updates on the general business and strategy. Joe can provide some updates when it comes to some engineering build-out, and Nico can provide research and economic updates. And then we'll get right into community questions. So we will go through the pre-selected questions, and then live questions will be eligible for the SPA reward. So either raise your hand, ask it live, or drop it into the AMA channel throughout the session. All right, so without further ado, let's start with the project intro. So if you aren't familiar, Sperax is a software development company, and we build open source financial software. We deploy this software into public blockchains. So anyone who's a user or an engineer, a builder, they can actually use our code, and they can build and integrate financial products that use our open source software. And our beachhead product is USDS. And USDS is a decentralized stablecoin that produces passive income for anyone that's holding it. So there are currently 25 million USDS circulating, and we have 22 million of collateral backing those stable coins. And in the minting process, as everyone knows, there's actually a burning mechanism. So what that means is as USDS grows in adoption, there will be a decreasing circulating supply of the governance token SPA. So thus far, this mechanism has already burned over 10 million SPA, which is 1.5% of all tokens in circulation. So it's really a great proof of concept for this burning system. So as it continues to grow, we'll get even more burn here. So it does work the other way around. So as there's redeeming of the stablecoin for underlying collateral, the system will mint SPA as well. So it's really simple to wrap your head around. As USDS grows, SPA shrinks, and as USDS shrinks, SPA grows. So this is really important to protect the peg, which we'll talk a lot about today, as we experienced our first stress test over the weekend, and it performed exactly as designed. Nico will shed some light on that. But very practically, since the last time we spoke, Sperax has begun doing in-person events. So we flew some team members out to Amsterdam, and we participated in DevConnect, which was absolutely amazing. We got to meet some of the leaders from popular DeFi protocols like Yearn, Aave, DBank, and we got a lot of exciting partnership collaborations in the works with those groups. So we're super stoked to announce those. There will be a 5-minute presentation of my talk that I gave in Amsterdam introducing the Sperax protocol. And that will be posted later this week. VESPA is going extremely well. We have over 3 million SPA staked. And this week we launched a new calculator. So we heard the community express their wants and desires for a more comprehensive APY calculator. So we recently launched that. I'm sure we'll have a lot more info pertaining to that in today's talk. And we just signed an amazing partnership with a tier 1 retail investing app. So it's going to be bringing USDS to the masses. I'm sure that we'll get into that as well today. And we even have new yield farms coming out. So as soon as next week, we'll have new ways for you to park your SPA and your USDS to earn various rewards in both fixed and variable APY models. So I'll shut up and we can pass the microphone over to Nico and Joe to give additional updates before we hop into the AMA. So I'll leave it to you guys.
So that was a pretty rough weekend for us. As many people in the community know, the Saddle Finance, the centralized exchange we use, got hacked. Our pools were fully unaffected. The hack happened on Ethereum. We're only on Arbitrum with them, and only one pool got really affected. But still, this caused a lot of panic in the market, and there was a mass outflow from the exchange. At the same time, they halted all trading. So we effectively had a situation where I think Saddle represented a bit more than 50% of our liquidity. So most of the liquidity we had for USDS suddenly got paused without any notice. And we also suffered a big negative demand shock for USDS because people got scared of having their funds in Saddle. So there was like a lot of outflow. And this hack led to a significant amount of selling pressure for USDS over the weekend. Thankfully, though, the protocol reacted as it was expected. Specifically, what happened is that there was a contraction of USDS supply. So effectively, the USDS got depegged for a short period of time, but there was a lot of arbitrage activity going on. So there were a lot of USDS that were redeemed on the protocol level. USDS supply contracted by about 8% during the whole incident. But the good thing is that the price was well defended. So the most we lost the peg was by 1.5%. And that was equal to the redeeming fees that the protocol charged at the time of peak congestion. So that's a design we did on purpose. Effectively, what the design does is it will tolerate a little bit more peg deviation at the time of a crisis, but it will reduce the amount of SPA that will be minted to save the peg. So 1.5% was what we had given as our max tolerance for a peg deviation. And we only lost the peg at the maximum by 1.5%, and then it recovered quickly within a few hours as the fees also went down to close to zero. So the protocol reacted exactly as expected. There was a negative demand shock. This led to a short-term peg deviation, especially because all of our liquidity, a bit more than 50% of our liquidity, was also halted. Trading was paused at Saddle. But yeah, we recovered quickly. And to me, it only increased my trust or stability mechanism. Like, it worked exactly as expected. And if anything, I'm more confident than ever before. Of course, the Saddle incidents will make us potentially have to make some tough decisions down the road when it comes to where we're going to prioritize liquidity strategically. But that also means that I can assure you there are going to be more pools launching in the really near future.
Thanks, Nico. I can be the next. I think the product team, Econ team, BD team has spent a quite unusual weekend. But our engineering team just do as we plan. We just do our stuff. So some updates from our side is, first, we are still doing the multi-chain research because it's not easy, guys. There's many projects you have to talk with. You need to understand what they really are compared to what they say they are, right? And technical analysis. So we really want to make USDS multi-chain as soon as possible. Secondly, we are building the USDS bond. So today we start drafting the smart contract. I guess we kind of already know 100% what we're gonna build. So we will start building this week. Hopefully it's gonna come out really soon. And also required by the BD team, we are building a farm to reward our awesome community who supported us during the last weekend. So it would be a SPA USDs dynamic API farm. So it works. So actually, we already have this idea for quite a long time. We think how to make the best farm that can combine the advantage of both the V2 model, and I mean, this is the time-proof, really awesome model. But for Uniswap V3, you have the NFT position. It creates some difficulty compared to ERC20 LP tokens. So we have been thinking about how to make a really good farm that combine the both features of V3 and the standard V2 awesome farm. So I guess we already don't know what we're gonna build. So our product team is writing the specification today. It will come out tomorrow. And our engineering team already started building the smart contract from last, I guess, not last week, yesterday. I think Yash started yesterday, but we already finished 50% of the smart contract. So SPA USDS farm would be come out first, and then USDS bound. So looking forward to it. Thank you.
Thanks, Joe. And so I think it would be helpful before we get into the community questions to review some of the APY stats. So Nico, do you think you could show some of the lockup stats, and particularly the how many SPA are locked and what the APR looks like for various lockups in light of that recent UI update that we got?
Yeah, for sure. So first of all, a new UI update is that all users can go on our DApp, app.sperax.io, and estimate based on the most recent data what the projected APY is going to be for different lockup periods. When it comes to last week, we had an APY, a max APY of about 250%, which is still pretty generous. With a yearly APY being close to 40%. So if you lock your SPA for a year, you get back about 40%. If you go for the max period, you get back about 250%. What's interesting is that the growth on the staking protocol has been pretty good. So we are growing this month an average of 10-15% week over week. So the number of staked SPA on a week over week basis grows much faster percentage-wise than the circulating supply. So we see this SPA absorbing a higher and higher number of the circulating supply as time goes on. It's still pretty early, so it's a bit more than 3% right now. I expect the long-term value to be in the range of 20-30% minimum. So I expect significant growth there. Finally, last week it was the boomerang effect got activated again. Effectively, the protocol bought back a significant amount of SPA tokens when the price of SPA was at the lowest point. So it defended the floor effectively. You could think it like that. And it accounted for about 25-30% of the SPA rewards. So about 25-30% of the SPA rewards came from the buybacks that the protocol did with all the yield generated, with 50% of the yield generated from USDS. So overall, the TLDR is we grow at a pretty healthy rate. You can expect still 3-digit returns if you lock the max period. And about 25-30% of the returns come from buyback. As USDS TVL increase, that number will also significantly increase. So the buybacks will play more and more of an important role as we gather more and more TVL on USDS. Yeah, that's about it. And on the USDS part, we still had another week of successful yield distribution at about 12%, I think.
Brilliant, thank you. And the final comment on that, the VESPA, I misspoke earlier. So I said there's about 3 million SPA locked. That's just very wrong. There's nearly 27.5 million SPA locked. The 3 number was because 27 million is over 3% of our total circulating supply, which is locked away. And that's on an average lockup of 2.6 years. So, people are around for the long haul. And as people learn more about this high APY, we envision that number to even increase more. So, we're focusing now on USDS adoption, but once we focus back on the SPA marketing, we anticipate that to significantly increase. So if you want to lock up and capture that high APY before we do more marketing, I highly recommend you get in there sooner than later, because as more people participate, that APY will lower, or it'll stabilize rather. Okay, so now we're going to enter the community AMA section. Don't hesitate to raise your hand and we'll bring you up on stage. Live questions will be eligible for the 500 SPA prize. So we have 3 different questions which will receive a prize, and you have to ask live. So either raise your hand and hop on stage, or drop your AMA question in the AMA channel, AMA questions channel. Okay, so I'm going to hop into the questions channel now. If someone raises their hand, Nico or Joe, please let me know.
Hi.
Hey, how's it going?
Hey, Top.
Hi. First, I want to congratulate for the team because the hard work is doing right now. I have a question. What is the most important for you now for liquidity, or listings, or pools?
That's a great question. So when it comes to listings on centralized exchanges, I think we have a pretty good exposure at the moment. So SPA is listed on tier 1 exchanges such as FTX, Huobi, KuCoin. We have direct to Arbitrum withdrawals, which is something we really wanted. So on the centralized front, I think we're definitely good when it comes to SPA. When it comes to USDS, we are in talks of having a centralized listing of USDS in the near future. We just wait for our liquidity on decentralized exchanges to improve a bit. So for both SPA and USDS, our strategic priority is going to get deeper liquidity on decentralized exchanges. That doesn't necessarily mean more listings, but more TVL. When it comes to USDS, we will further diversify and add new pools to avoid relying on a single DEX as much as we relied on Saddle. So this was a good lesson for us, and we will make sure to further diversify USDS liquidity. But yeah, our number 1 priority will get to get more liquidity, effectively try to get more farms and incentivize more TVL, rather than segmenting our liquidity across multiple venues.
Thanks.
All right. So thank you for hopping up and asking that question. Here's a great question as well. So this is from Gracie, who asked this at 11:50 a.m., so a little bit before the AMA started, but it's extremely relevant. So the saddle hack is believed to have nothing to do with USDS. But it was stated, from our tweets and some of the things that we've mentioned, that this was a stress test for the peg stability and the resilience of USDS. So how is this hack related to the peg stability, and how does it, further prove the peg stability moving forward?
I can try explaining that. Effectively, the user is right. USDS was totally unaffected by the hack, in a sense that USDS was not stolen. Like, there was not a single dollar stolen from the pool that USDS participates. But at the same time, the hack had 2 significant effects on USDS. First of all, as a precaution, Saddle halted all trading. So suddenly we lost access to about 60% of our liquidity. That means effectively that in a block time difference, we lost the ability to be able to conduct big swaps on USDS. So in the past, about 60 to 70% of our liquidity relied on Saddle. So that meant that a great amount, multiple millions of USDS, could be sold on Saddle without the peg breaking. So with the hack, this suddenly stopped being the case. So liquidity was affected severely because we relied a lot on Saddle being one of our first strategic farms. Secondly, Saddle offered a great use case for USDS. A big amount of the circulating supply of USDS was locked on Saddle because they could get a good yield by doing that. So even if our pool was not affected, because the hack created a lot of FUD, we had people leaving the Saddle pool and closing their LP position, selling USDS on the way. So effectively, that single incident led to a reduction in liquidity together with significant selling pressure for USDS. And it was a stress test because the selling pressure was such that the Uniswap V3 pool could not fully accommodate, couldn't fully absorb all the selling without the peg breaking. And that's when the stability mechanism took over. So we saw USDS supply dropping by about 8% over 2 days. That's a demonstration that the stability mechanism worked. For a reason not related to us, there was a drop in USDS demand and USDS supply contracted to ensure that USDS trades at the peg. So we didn't lose the peg for more than a few hours. Even if all of those things happened, as soon as fees went down and supply contracted sufficiently, we saw USDS trading at $1 within a few hours. So it was the ultimate stress test. If you think about it, we lost more than 50% of our liquidity, and the main demand for USDS we had got hacked. So it was a pretty unfortunate event that we managed to survive without losing the peg by more than 1.5%, and that was only short-lived. And yes, there was some SPA selling pressure when that happened, but after we recovered the peg, there was a really healthy recovery in the price of SPA. So overall, this organic market reaction made me pretty satisfied about where we are at the moment.
Thanks, Nico. So this is a question by Macintosh, and this was asked at 12:20 during the AMA. So focusing on the data dashboard, it was mentioned that Sperax has deployed a USDs Subgraph using the Graph protocol. And their understanding is that the community can access all of this data related to this USDs Subgraph. So could we elaborate on how the subgraph works and how users could potentially integrate this subgraph for data dashboards and other dashboards that the community might want to create?
Yeah, I can take this question. So, Daya, one of our developer, he's in charge of the subgraph. So I guess we now have a USDS subgraph, SPA subgraph, VSPA subgraph. I think two SPA subgraph, because one on Ethereum, one on Arbitrum. Let me check whether they are public yet. I guess we are wrapping up all the subgraphs. So I guess probably might take a bit time before we make it comprehensively correct, and we'll share with the community because we don't want to share the wrong data, right? I guess let me check whether it is public yet. Hold on. I guess it's not yet. Yeah, I guess it's a really good question. I'll push in the team inside the team to publish the data, so I guess the community can share the. I guess at least USDS, I think it's complete and it's comprehensively correct. So I guess users can share this data when you want to build a DeFi pause, right? Something like that. That'd be awesome. Right?
Yeah, they mentioned a couple, metrics that could visualize the protocol health, and this user Macintosh is interested in doing, a bounty to build that out. So on the bounty side of things, as we're publishing the subgraph, feel free to reach out to Alec, me, and we can discuss a bounty program. But I'll also share some more insights as to how you can apply for bounties and what bounties we have available for work like this, because we would love to get some community members involved, especially because you all know what type of dashboards you need the most. So thanks, Joe.
Yeah, this is a good summary. I mean,
okay.
All right. Hello, can you hear me?
Yes.
Okay. My question is this. It was said that your pool was not seriously affected during the hack, and yet this is believed to be, the biggest stress test you've ever experienced. So my question is, what would have been the scenario if your pools were seriously affected, And I believe that this hack, of course, will be an eye-opener to possible future threats. So going forward, what adjustments will be made just to ensure that we don't have to experience such kind of serious magnitude of hacks again in the future that would affect the stabilization mechanism?
I can answer that for sure. So yeah, our pool was not affected. You are correct. It was not affected at all directly, but trading was halted. And as I said, more than 50% of our liquidity was with Saddle. At the same time, the fact that the main exchange we're using, most of USDS TVL is on that exchange. In a sense, like most of USDS is locked on that exchange, and this exchange got hacked. This led to a lot of fear. So even if nothing happened, even if USDS was not stolen, market participants, rightly so, were scared. And when it comes to the actual selling pressure, it was significant. So we saw like a lot of millions of USDS being sold in literally just a few hours. That's why we depegged for a short period of time. When it comes to the future, we are already, as I said in the beginning, we will already building a diversified liquidity. So we will be opening new USDS pools. I'll be able to, I think Alec will share the details on that within the week, but we have a pretty comprehensive plan when it comes to the new pools we'll be creating. So first of all, that's the first solution. USDS liquidity will be more diversified. And secondly, as USDS grows, we won't rely as much on a single DEX. So as I said, Saddle right now gave one of the main use case of USDS by being able to LP there using USDS. There are going to be many more use cases going forward. Effectively, there won't be a single source of failure that will be able to lead to such big drop in of demand because of a single incident, because of a black swan event. So we won't depend on a single DApp or a single DX as much as we do now, and we are actively working on diversify both of our use cases and liquidity. But we could have done better, but given where we were, unfortunately, we were not as diversified as we wanted, and that's why it was a pretty severe stress test. But we successfully passed it.
Thanks, Nico. All right, I'm going to move on. So, Nico, this one's coming back to you. So, thanks for tackling all these challenging questions here. So, this is from Kaushika, and this was asked at 12:24 during the session. So, the Saddle pool currently holds 17 million USD, and the return or the APY is pretty generous. So, how does Sperax continue to afford to create these new pools in light of basically paying for this liquidity? How are we going to continue to pay a high APR but also have a lot of different liquidity pools?
The answer there is actually is twofold. First of all, we are building some new ways to incentivize liquidity that won't rely directly on SPA emissions. That's the so-called bond product that we will be launching. So a big part of USDS liquidity will actually come in a slightly different way than what happens in most protocols. So what we will do is we will allow users to mint some USDS at a discount by subsidizing the SPA component. So effectively, we'll be burning some of the foundation SPA to allow users to get the USDS on discount. But in return, users will have to lock their USDS in the form of LP tokens to further increase liquidity around the USDS ecosystem. So a big part of our liquidity we envision to come through that DeFi primitive, where effectively we will be able to get more liquidity without burning, without diluting SPA circulating supply. Secondly, given that the risk profile of Saddle has increased, we might have to reallocate some of the budget there towards new pools. If something like that happens, we'll notify everyone well in advance.
All right, thanks, man. Next question. So this is from Zodiac Wizard, and it'll be for me. So can you say more about the partnerships coming up? And I will describe the two partnerships, but you're going to have to wait just a couple more days for the official announcement when it comes to who the groups actually are. But I'll give you some hints. So first off, as I mentioned before, we're tackling growth from two different perspectives. So one is from the crypto native side of things, where Nico's brilliant incentive models provide necessary liquidity to defend the peg against situations like we had this weekend. And once we prove our ability there, which I think we did this weekend, we're ready for what we're calling the mass adoption phase of growth. So everyone knows that crypto today is very hard to engage with, and we're extremely passionate about creating financial tools that are equitable and accessible to anyone, not just wealthy people or not just people that maybe have, a traditional bank account. So in light of those two different high-level categories, we're first going to be launching a new stablecoin farm with a decentralized stablecoin partner, one that we know that you've heard of, but we'll stay quiet for now. And users will be able to gather those rewards from their favorite stablecoin pool. So we're going to be incentivizing some liquidity on Curve because it is the most battle-tested, and our new partner is able to provide some additional incentives. So users can earn not only SPA, but two more types of rewards. So stay tuned later this week, early next, for the details around the new stablecoin variable APY farm on Curve. Super stoked about that. And then on the other side of the same coin, which is the mass adoption side, we actually just signed a partnership with a retail investor application that is designed and services more retail users. So you can think of companies like Robinhood. So that is who we are attacking from a growth perspective when it comes to the mass adoption objective. And with this new partnership, users that aren't DeFi native, they've never bothered with public or private keys. They don't necessarily want to do all of the, nitty gritty DeFi research. They'll be able to get USDS in the traditional experience that they're used to in their mobile app. So this is the first of many partnerships on the mass adoption front. And really now, anyone that can download one of those apps from the App Store is going to be able to capture the 11% auto yield, plus even a little bonus when using USDS through these apps. So we're super, super excited to usher in this whole new user base that isn't crypto native. And we're going to do that through partnerships. So these are, front-end portals that just make it even easier to get USDS. And we anticipate the size of this deal, approaching 1 billion USDS being minted over the course of the next 3 years. So this is going to be extremely important as there is market volatility coming up in the next couple of years, that users have a super easy and accessible way to get out of their risky positions and into high-yielding stable coins. So this is just really important for everyone here and all SPA holders, due to the fact that as we attract new users and as we begin to accomplish this objective of mass adoption, we all know that the minting of USDS causes a significant burning of SPA. So that's why everyone here should be excited about that. So even if you're not a USDS holder, what this is going to do is radically increase the amount of retail users holding USDS, which will consequently burn SPA in the process. So I'm sorry I can't give you specific names, but I think you'll be very excited in the coming 2 weeks about these new farms and the new retail adoption. Okay, my monologue is over. Next question. This is a question from Harsha. as we recently observed a saddle hack, 10.3 million. Is Sperax going to refund investors' money? I'm just bringing this up to clarify that no USDS was stolen. So no, we won't be returning investor money, as the protocol worked as designed. There was no hacks. Saddle actually had the exploit. Other stablecoins on layer 1 Ethereum were stolen, but USDS was not affected in this hack. It just happens to be where we put our liquidity, so we wanted to address it to our community to let them know USDS is in fact safe. Okay, moving on. Gracie asked, okay, with the saddle halting your pools, what temporary solutions do you have? Well, Uniswap is still live, so arbitrage can be happening there. That's how the peg is being defended. And later today, the saddle pool will be, trading will resume. So you will be able to continue to earn your SPA and SDL incentives, and you can continue to deposit, trade, and withdraw starting this afternoon. So stay tuned for Saddle's official announcement on that. Okay, the next question from Matin. He read that currently Sperax only accepts USDT and USDC as collateral. Is there a possibility in the future that you will integrate other types of stable currencies or crypto tokens as collateral?
There is a promise that we're going to do that in the future. The reason we started with USDC and Tether is because within Arbitrum, these were the main collaterals we could get like good yield at when we launched. We launched pretty early in the Arbitrum ecosystem, so the yield generating opportunities were not as many. We envision to move towards much more decentralized collateral, so we will be having close partnerships with other stablecoin providers like Frax, Terra, and DAI. So we'll get much more on-chain based stables to back us, as well as more volatile crypto assets such as Ethereum or wrapped Bitcoin will come into play. So the collateral composition will change and become much more decentralized moving forward.
Amazing. Thank you. So here's a little bit more of a technical question. This is Josh 3GGG, and he is asking what these 4 parameters are referring to in the white paper. It's the X target, the X redeem, the X mint, and X target. So 3 parameters: target, redeem, and mint. Not sure who wants to take that one.
I can get it. It's Chi, but X is the same. Yeah. So we have the Chi target, which effectively tells us what's the collateral ratio that the protocol is targeting. So at any given point in time, the protocol will take as an input USDS price as well as time, the block height, and based on those, will uniquely determine a target collateral. That's what the Chi target is. The Chi minting is when you mint a new USDS, what's the collateral requirement, how much collateral you should put, and that's always equal to the Chi target. Finally, there is the Chi burning, the Chi redeeming, which effectively, under most circumstances, will be equal also to the Chi target. But if the protocol is under collateralized, let's say because one of the collaterals of the protocol has dropped in value, then the protocol will preserve some more of the collateral during redeeming. So it will print a little bit of extra SPA and try to hold some extra collateral to make sure it reaches back the eventual Chi target. So effectively, Chi target is what the protocol is targeting. Chi minting is what you have to, how much collateral you have to give the protocol when you mint new stable coins under normal circumstances. That's always equal to the Chi target. Chi burning, Chi redeeming also should be equal to Chi target, but it changes when the protocol is under collateralized. When it has less collateral than the target, And it's a way to ensure that as more redemptions happen, the protocol will reach back its collateral target. So more redemptions will raise the collateral target of the protocol. The actual collateral of the protocol, sorry. So yeah, I think I answered all three.
Awesome. This is a question pertaining to the stress test. So we had this real life stress test this weekend, but Allison M2000 is asking, have there been previous stress tests and what were the results of those?
So we didn't have such a direct event. Like we had like some rough weeks where, let's say, Bitcoin dropped like by double digits within a week, and the crypto market like had a big decline. But at the time there was not a shock as direct to USDS as the one we experienced. It was more like market-wide stress test. So like market is suffering. Let's see how USDS will behave. And yeah, we didn't have any issues. We survived like the crypto bear weeks in a pretty successful manner. This weekend was the first time that we suffered such a direct liquidity and demand shock as the one we had. So it was not a market shock. It was a saddle shock that affected USDS disproportionately more than other cryptos. So yeah, I think it was the most severe test we had for sure, and the type of risk was much more targeted to us than the crypto market overall.
All right. Do we have any other live questions from any audience members now? Because we've exhausted all of the text questions. Take it away, Jimmy.
Hello, everybody. How are you?
Great, thanks.
I'm enjoying this group, like this Emma from Turkey. And Turkey has a great potential about crypto, and most of the people, and most of the exchanges, they are investing in Turkey because there is huge potential who is investing in cryptos. And the Turkish community, generally, they know about SPA from Sperax app. And Turkish people, they love to play games, which is play and earn, and NFTs, that kind of things. So do you have that kind of plans for future? And also second question, this is a little bit crazy. Are you planning to launch your own chain, like not Ethereum or Arbitrum, your own chain? This is my question. I hope you understand me.
Yeah, I can speak to this. So when it comes to play to earn and NFTs, we have the belief that those fall. So how do I say this? Those are more like means to an end rather than an end in themselves. So in crypto, there's all these cool proof of concepts being delivered to the market, but we don't believe that they're full products in their own sense. So for example, in a play to earn type experience, what we believe is that's more of just a gamified onboarding experience for users. So what that might look like is when we do a partnership with a metaverse project where this project is going to be integrating USDS as a metaverse savings account for their users, we can absolutely add new types of interest mechanisms. So whether they be earning NFTs, whether they be learning information about a protocol and get rewarded in SPA, we'll be using a lot of those play to earn and NFT mechanisms as incentives rather than products in their own regard, because our number one priority is drive users to adopt USDS as a medium of exchange and a long-term store of value. So we will be using them mainly to drive usage toward the stablecoin. Two, the blockchain question. So we do have a layer one blockchain infrastructure that we have set aside for when we're going to strategically need it. And what I mean by that is we we ran a public testnet. We had over 700 stakers participate. It went very, very well. But at the time, we hadn't launched the stablecoin yet. And what we elected to do, just from a business strategy perspective, is to prove out the peg stability and the use case of the stablecoin on a blockchain that already works and is stable and secure. And we chose Arbitrum for that, for the security of Ethereum, plus the gas fee discount. But we have this blockchain available that we envision using for application-specific use cases. What we mean by that is, in the future, say 3 to 5 years from now, once there are many billion USDS outstanding, people will begin integrating USDS into things like payment applications. But for payment applications, Arbitrum may not be the best layer 1 infrastructure to satisfy the user needs. So when we enter this reality where there will be, KYC layers involved, and there will be tax layers, and basically, all right. So I think we're done with community here. We just lost Nico, but I'm going to bring Elliot up on stage, and then Elliot, could you help us pick the winners here?
Yes, absolutely. How is my volume? Everything good? Okay.
Sound good?
Yeah, thanks. Thanks, Alec. So we appreciate everyone listening live today and interacting with us. And we wanted to find a way to reward you guys for doing so this week. So I have taken a snapshot of those of you who are live and also asked and had a question answered. And this will make you eligible for the 500 SPA reward that will be given to 3 people today. So at the conclusion of this AMA, we will choose the winners, and then we will make a post on Discord this afternoon announcing those winners. So make sure that you check back in on Discord later today, and we will have those displayed. That's all I got, Alec, if you want to close us out.
Sounds great. So is there anything that we need to do now for that, or what audience member?
Yeah, so we'll go ahead and just conclude the AMA. We can close out. We will, as a team, get together and decide on the back end and then make the announcement.
Wonderful. Well, cool. Thanks, Elliot. Thanks, Joe. And thank you, community, for all of your great questions and sticking with us. And stay tuned to hear the winners. Have a great day, everyone.
Thank you, everyone.